Hi, I'm Linda Eedes, and I'm here today with Nick Balkin, the Chief Investment Officer of Foord South Africa, and Rashaad Tayob, who is a fixed income portfolio manager here at Foord and also is a macroeconomic strategist. And I should also mention that Nick manages our funds as well on the multi-asset side. So we're talking today about the potential decline of the dollar. This is something that's come up a lot in discussion with investors. Obviously, we've been seeing some talk about a BRICS currency. And the dollar, since the end of World War II, Rashaad, I think it's fair to say the dollar has been the global reserve currency. It's the predominant currency for international trade and finance. It's been used as a store of value. Why is there all of a sudden this kind of talk about the potential demise of the dollar, do you think?
I think it's happening for two reasons. Firstly, you've seen inflation elevated in the US for the last 2 years. We haven't seen inflation like this since the 1970s. So people who are holding the dollar have actually lost purchasing power by holding the dollar. So it's the question of it being a store of value, it hasn't really fulfilled that role recently. And then secondly, you've seen the US become very aggressive in terms of controlling the dollar system. So they effectively expropriated $100 billion plus of Russia's assets, which is unprecedented. Usually sovereign assets can't be touched, but they've decided to effectively weaponize the dollar, take those assets. And I think it's made the other powers like China, for example, the Arabs who store a lot of money in dollars, it's made them a bit cautious about whether they want to really be holding as much dollars as they used to before.
So if we're talking about the demise of the dollar, we have to be talking about the ascendancy of something else. I mean, Nick, obviously one of the obvious alternatives that has been noted is the Chinese yuan. What do you think the possibility is of that becoming a global reserve currency as China obviously becomes an increasing part of global GDP?
I don't know. The truth is it will get bigger in terms of trade. You are seeing more things being settled, whether it's oil, whether it's some commodities. The Chinese are pushing for further trade in yuan. So I do think that from a transactional point of view, it absolutely is going to get better. I think you've got to ask yourself the question is, would you want to put all your money that you are waiting to retire with and set it in the yuan? I think there are many reasons why I wouldn't do that. I struggle to believe that the yuan's the replacement. I do think we can get into potential other replacement. I don't think the yuan's the be-all and end-all to the reserve currency.
What about a BRICS currency? I mean, is that a marketing exercise, do you think?
I think it's marketing. It's a reflection that current countries like China, Russia, they don't want to be beholden to the dollar. If you look at what the BRICS currency means, to be honest, no one has really put a concrete plan for what it is, and they've been very vague about it. And at the moment, all it does, it looks like they're going to construct a basket of different currencies. And South Africa is going to get stuck in there somehow, even though, I mean, on the scale of where we sit versus China, we're really quite insignificant. Effectively, anyone can construct a BRICS currency at this point. If you trade with China or India or Brazil, and you just maintain that holding in real or rupees or Chinese yuan, you've effectively diversified your holdings. The problem is no one wants to do that. They still want to hold the dollars. And the BRICS currency is maybe a way to soften that. So you don't necessarily say, I'm holding Russian rubles or Indian rupees. You hold this BRICS currency and maybe you feel like you've diversified somewhat and you've kind of tilting the balance of power away from the dollar. But I think it's a lot of spin, and the Chinese will do a certain oil trade in yuan, and then suddenly it will be a big headline. But it's really a drop in the ocean when you're looking at global trade.
Effectively, what Rashaad said at the beginning was China, well, I think you might have alluded to it, is China actually is a managed currency. So if you go look at it, they manage the currency versus the basket of trading partners. It's not a free-floating currency. So in order to become a reserve currency, you need some sort of element of free trade and free floating. So I still am skeptical whether it's the yuan or this BRIC currency that can supplant the dollar.
Actually provide an alternative.
It needs to be one country to a certain extent that you understand the simplicity of its interest rates, its inflation, its savings, its democracy, etc. I mean, there are other alternatives which we'll talk about.
Okay, yes. Going on to that topic, I mean, we've seen central banks have now hit their highest level of gold purchases since, I think, 1967. So we've seen a dramatic increase there. We do hold some gold in our funds, Nick. Obviously, I suppose as geopolitical tensions arise, you're going to have more talk about moving away from sort of the dollar as a global reserve currency. What about gold being sort of an alternative store of value, or is it that already?
I mean, it acts as different things at different points in a cycle. Sometimes it's protect against inflation. Sometimes it's an insurance policy against war. I think more recently, Rashaad's spoken about it in many different podcasts. It is, if you're a Russian right now, if you're a Saudi Arabian right now, and your money has just been locked up if you're a Russian in America because the Americans disagreed with you, surely you're thinking about where else you can put it. One of the places that can absorb that size of reserve that I spoke about at the beginning is gold. So absolutely, you've seen the change. I think the central banks have been sellers for quite a few years in a row. Over the last 2 years, you've seen them turn buyers. So absolutely, the central banks are selling dollars and buying gold.
Even if you had to introduce a gold-backed currency, the question is, will the global banking system accept it onto that platform and enable people to interact with it, trade with it, load it onto their bank accounts, effectively use it as a form of payment and storage? And they highly incentivize not to, because they really don't want to see a challenger for their own currencies.
Okay, so what I'm hearing from you guys is that calls of the death of gold are greatly exaggerated. Of
the death
the
of
dollar,
dollar.
the dollar rather. Gold obviously a bit on the ascendancy. Anybody who's watched the documentary The Gold Mafia will know that it's a very useful store of value for those on the wrong side of the criminal system. But yes, I think at the end of the day, Nick, would you say that it's about being well diversified, having exposure to different geographies, different currencies when it makes sense, and holding a bit of gold as a bit of an insurance policy as well?
I think so. I think, as I was saying, it doesn't mean you fill your whole portfolio with gold, but it has certain elements to it that do good things to your portfolio over time. So I think absolutely people will have looked at the rising real yields or rising real rates that we've got in the US. Generally, that's not a good signal for the gold price, because the central banks are getting serious to fight inflation, supposedly. But yeah, as we've seen, as the US starts to, or as the market looks like the US is going to cut rates again, so you've seen another kicker to the gold price. So I think there are different engines to a gold price that is underappreciated.
I suspect that this is a conversation we're going to continue to have over time. Thanks so much, Rashaad and Nick, for contributing to this conversation. And thank you to everyone who's joined us today.